The market will never forgive the undisciplined. If you dare to go against its rules, it will crush you without mercy. Trading is not a game of luck. It's a battle of psychology and discipline, where only those with strategy, patience, and determination can survive and succeed. How many times have you entered a gold trade, feeling fully confident as the price starts moving up, only to see the market suddenly reverse, going against your prediction? The pressure builds, anxiety sets in the end, you close the position far earlier than you had planned. Sound familiar? I still remember my first gold trade. My position started going up and I felt triumphant, thinking I had caught the wave. But then, just like that, the price dropped, and I panicked as I watched my investment sink into the red. These were my first lessons, the psychological tests that every trader goes through. And I wish someone had taught me these things earlier. Had I known this trick sooner, I could have saved myself so much time on the journey to success. Today, I want to share a simple yet powerful strategy that could completely change how you approach and manage gold trading. If you're busy with work, wanting to spend more time with family and yourself instead of constantly monitoring the markets, then this approach is for you. The market doesn't need you 24/7, but it does require you to be ready when the moment comes. To make the most of this strategy, you might consider opening an account with XNES, a broker that offers swap-free accounts, which is very beneficial for long-term trades. I've placed the registration link in the description below. Additionally, there are other registration links provided there. When you open an account through these links and start trading, you'll receive a commission rebate with details provided in the description. And finally, to make your gold trading even more effective, try combining fundamental analysis with technical analysis. This will give you a broader perspective on the market and increase the odds of success with each trade. Get ready to join me as we explore the essential principles and deep secrets of gold trading. Now let's take a look at the gold price chart. First, I'll switch to a line chart to make it easier for everyone to follow without distractions. Do you notice anything? This is a monthly time frame chart. That's right, a monthly chart. From 1998 until now, the gold per USD price has been steadily rising over time. With gold, if you invest long-term on an upward trend, your chances of winning are very high. Let's move on. Now I'll switch to a chart that's even easier for you to view and analyze. The Heikin Ashi chart, which uses only green and red candles. Looking at this chart, it already feels easier to analyze, right? The Heikin Ashi chart smooths out price action, filtering out some of the market noise commonly seen in regular candlestick charts. This makes it ideal for identifying long-term trends, which is particularly useful for gold, on an XU/USD, since we can see an overall upward trend over the years. You can also highlight gold's long-term performance. Despite occasional sideways or correction phases, the general trajectory remains upward. This reinforces the value of trading gold long-term, where the win rate tends to be high in long-term trades. While Heikin Ashi candles are great for identifying entry points, they may occasionally produce a few misleading signals. So always remember to combine this with other indicators for better accuracy. Now I'll combine the Heikin Ashi chart with the 6-period moving average, MA6. From my observation, MA6 helps delay reactions to price movements, effectively filtering out market noise, and as a result, can make trades more profitable. In this chart, we can see that gold has maintained a stable upward trend over the years, despite some correction phases. The MA6 line further confirms the trend by providing an additional layer of information. When Heikin Ashi candles consistently stay above the MA6 line, it signals strong upward momentum, giving long-term traders greater confidence in their buy positions. On the other hand, when the candles start to decrease and cross below the MA6 line, this could indicate a potential trend reversal or a consolidation phase, as we've seen in past corrections. However, rather than selling, I would choose to stay out of the market when the candles turn red. As mentioned earlier, gold tends to increase in value over time, so holding long-term buy positions is often more beneficial than attempting to capitalize on short-term declines. This strategy helps avoid unnecessary risks from short-term fluctuations while maintaining the advantage of the primary upward trend in gold. The combination of Heikin Ashi and MA6 not only highlights the main trend, but also aids in identifying potential entry and exit points with greater clarity, making it ideal for those who want to capture the larger trend movements in the gold market. Now let's move on to some specific cases. Typically, I enter a position starting from the second Heikin Ashi candle after it closes above the MA6 line. I then add to my position on the fourth candle, as long as it remains green and has a longer body than the previous candle. If I see any signs of reversal, I hold off on adding more. If the trend continues in my favor, I'll add again on the sixth candle. In a strong, sustained trend, I usually enter up to 3 positions. For those of you who have followed the video up to this point, I'd like to share a small bonus, a trading strategy that can help increase your efficiency and optimize profits. This is a continuation of the previous content in the video, and I hope it brings you valuable skills and insights. Starting with a straightforward strategy, keep an eye on the Heikin Ashi candles above the 6-period moving average, MA6, on the monthly chart. When Heikin Ashi candles remain above the MA6 and continue to show upward momentum on the monthly chart, this can signal a favorable time to prepare for a buy position. Once this signal appears, the next step is to look for a precise entry point on the daily chart. However, remember that even when entering on the daily chart, it's essential to keep an overall view of the monthly chart. This will provide a broader perspective on the long-term trend of the market. If you have more time to monitor the market closely, you may also use both the monthly and daily charts to trade more flexibly without needing to wait too long. This approach helps you seize opportunities quickly and strengthens risk management. Importantly, the probability of success remains high if you apply the method correctly. If you consider scaling up your position by averaging, keep in mind that each added position should be of equal size to your initial entry to avoid uncontrolled growth of risk. For example, if you're comfortable trading with a volume of 2 lots, split it into 2 one-lot trades. This will allow greater flexibility in managing your position at critical points. For instance, if the Heikin Ashi candle turns red but hasn't yet moved below the MA6, you may decide to close one position to minimize risk. If the price continues to rise as expected, the remaining position will help you optimize profits. Additionally, when analyzing technical charts, don't forget to incorporate fundamental analysis as well. Each type of analysis has its limitations, and complementing technical analysis with fundamental insights can help overcome these weaknesses, building a stronger foundation for your trading decisions. To increase the accuracy of your investment decisions, dedicate some time to understanding how the economy operates. This will improve your entry points and minimize risks during periods of market noise. Study macroeconomic policies, for instance, how interest rate hikes impact the entire economy, especially gold prices. These insights will provide you with a more profound perspective and enhance your trading strategies. Finally, in my opinion, one of the most crucial skills for any successful trader or investor is the ability to self-learn. The capacity to continuously expand your knowledge and study economic and market factors is the key to progressing on your investment journey. I've shared all my experience on long-term gold trading across monthly and daily timeframes, and I hope these insights have provided you with a clearer perspective. Don't forget to hit the like button for this video and subscribe to my channel so you won't miss other valuable content. Wishing you success in trading and strong growth in your investment journey. Goodbye and see you in the next videos.